everyone. This is John Feneck with the Feneck Commodities Report, and with me today is my partner on the YouTube channel, Don Durrett, founder of goldstockdata.com, one of the best resources out there for gold and silver everything. Hey, Don, how's it going today?
Hey, John. Let's do it one more.
All right. I wanted to note that this is our first time recording this with InvestorTV. It's an excellent channel that interviews people like ourselves. So this will be broadcast on InvestorTV, and we'll hopefully do something like this on a regular basis. So, Don, let's start with macro. If you could just kind of give us your thoughts as to what's happened over the last 2 weeks or so since we last talked.
Well, we're heading into the election. I think this is a historic election. I think this is going to be a trigger. Yesterday, I was interacting with David Hunter, and he thinks this is just going to be a hiccup. That, yeah, okay, they'll have the election. The markets, they're not going to digest it well. We're probably going to have some type of a small correction. But then the markets rally out of that correction and take off again to another all-time high. But I'm not in that camp. I actually think that this is a very negative trigger, and that I think Harris is going to win, not because I think that she deserves to win or that she's going to get the most votes. I think she's going to win because history is going to repeat, and we're going to get the same thing we got in 2020, which is basically the ballot box getting stuffed. So, I mean, if you look at the mail-in ballots back in 2020, historically, we didn't have mail-in voting. We had absentee voting, which mail-in ballots were kind of a small percentage. And historically, the absentee ballots were rejected at basically about a 1%. And usually it's 1% because 1% don't sign them. In order for a ballot to be valid, it has to be signed. Mm-hmm. That's the number one reason why it's rejected. So in 2020, only 1% were rejected, which is total BS in my opinion, because we should have had more than 1% considering how many people voted. Well, that's just my opinion. It just doesn't resonate. And if you look at the video, if you go back and look at the video of people dropping off ballots, there are people dropping off thousands of ballots at one time. It's like, where in the heck do you get 1,000 ballots from? And these videos, there was multiple. It wasn't like one person, and people were just dropping these mail-in ballots off. And I thought it was, I didn't trust. I thought it was weird. We had 0 audits on mail-in ballots. Well, as we know, there was 0 audits in 2020. And so I don't see any audits this time. So the moral hazard is off the charts. In other words, all you have to do is get a hold of one mail-in ballot and then copy it, take it to a copy machine, make 50,000 of them, and stuff the mail-in ballots. Now, you're telling me I'm crazy. Don, this is impossible. It can't happen. Well, I'm telling you, 1% were rejected. 1%. So they know, and I think it was stuffed. I think the mail-in ballots was stuffed in 2020. I think they're going to do it again. My gut feeling is that Harris wins because of fraud. I'm saying it, I'm a denier. I'm an election denier. But that's just how it resonates with me. I don't think Biden got 81 million votes. Now, I'm not a Republican. I'm not a Trump supporter. I'm just saying it as I see it. I consider myself an historian. I'm a writer. I'm neutral on this. I consider myself, I've written a couple political books. They basically attack both parties. I created my own political affiliation. I call myself a libertarian utopian. I'm a unicorn. I'm the only one. I'm one of one. And
I did not know this.
I believe that the future of America is not what people are going to expect. Politics, everything's going to turn. For instance, I'm talking about macro here because I think this political election turns the whole tide of it all. That's why.
Yeah, of course.
And so, somebody voted yesterday. She said, she goes, I'm going to be angry if you don't vote. And I replied back and I said, it's ironic that you're going to be angry at people that don't vote, but yet in 2028, you're not going to vote, which is weird. So it's people that are like, you better vote or else. And then 2028, I'm done voting, right? Because this is going to, like Elon Musk said, this is the last election. And it's not that he didn't mean it's the last election we're going to have, but it's kind of the last election that means anything because it's going to be, and he explained it. He was interviewed by Tucker Carlson. He said that basically America is going to turn into California, where if you live in California, your vote doesn't count. The only thing that matters is who gets the nomination for the Senate or the House, and then we know who's going to win, kind of thing. It's going to be the same nationally. That's kind of what he meant. And I think he's right.
Okay.
But we're going to have different changes. And so America, the only thing is, if you go look back, we go all the way back to 2001 to today, it's gotten really strange. You have to admit that America's gotten a really strange place. It's like, what is going on? And I think kind of the heart of that strangeness is like the mainstream media. It's like, it was ironic. I just tweeted out just a few minutes ago, the Drudge Report. They basically were they were calling Trump kind of insane, and they're having all this attacks on Trump. And then the very first line, the Drudge Report is an amalgamation of all the news events. They're a collector. And so the very top line, they had a news article about how the media nobody trusts the media anymore. The irony was unbelievable. Here they are, completely one-sided anti-Trump, and then they say the media is no longer trusted. And so the media kind of broke in 2016, and it's got progressively worse. It hasn't improved; it's gotten worse. Where the media, is basically now a narrative for basically liberal politics, if you will. And there's, like I said, this election is massive because it's going to turn, I think, America in a new direction. We're going to pivot here. We're going to pivot after this election, I believe, away from Washington, which is bizarre. Away from Washington. So what does that mean? It means we're basically going to take all of our politics back to the states, back to the local government. The states will ignore Washington, and then the local government will ignore the state. That's the trend we're heading down. This is the pivot point. So I think when Harris wins, Wall Street will have a heart attack. And the reason why they'll have a heart attack is because historically, the left hasn't really cared about economics.
Mm-hmm.
All you have to do is look at Cuba, look at Venezuela, look at North Korea. I mean, these are the worst economies in the world. So the further you go left, the worse the economy gets. And she's as far left as you can get for any elected leader we've had. And she's not going to the middle. She's going to stay over there hanging out on the left. And so economics is not going to be her forte. It's not going to be her priority. And so I think that Wall Street's going to figure that out. I think right now, actually, I think Wall Street thinks Trump's going to win. If you look at Bitcoin at 66,000, I think the reason why Bitcoin's up is because the anticipation of a Trump victory. A lot of these voting places have Trump up 5% plus. So when she wins, I think the economy heads down. And I actually think the economy is actually the S&P is actually not going to get to 6,000 by the election in 3 weeks. And that I think that the S&P will actually head lower. I actually thought it would go below 5,500 over the next 3 weeks, which probably won't happen. But say low 5,600s, so we drop 200 points before the election, something like that. If we stay above 5,700, I'll be a little surprised because I think people are going to start to get nervous of a Harris victory. And one final thing on macro, one final thing on the economy. Somebody posted the earnings in Q3, removing the Max 7. So if you just take the net earnings for the 493 stocks, it was flat for the quarter, flat. This economy is not healthy. If you got no earnings for 493, now these 493 companies, these are not small companies. This is the top 500 companies. So if only 7 companies are kicking butt and those 493 are flat, spinning in place, what about the small businesses? The small businesses are even worse. There's actually an uncertainty chart that was out. I reposted it yesterday. It's the highest it's ever been. I mean, if you look at it from 1980 to today, I mean, it's the uncertainty has never been this high ever. It's like, what's going on? So small businesses are not doing well. And then even big businesses are not doing well. So I think the economy is actually a lot weaker than people think. And I think it could turn south very quickly here in November.
So there's a lot of information there. I would say that the macro picture to you is such that we're going to get a mild correction pre-Harris, and if she wins, and then a much more substantial correction after November 5th. Am I hearing that right?
Yeah, crash starting on November 6th.
Okay.
The end of the bull market, the end of the 15-year bull market.
Mm-hmm. Well, this bull market has run way longer than anyone has anticipated, including myself. But I will say, to your point about the S&P 500, I think it's an important one, because I really truly believe a lot of our listeners are not just mining investors. There are people that have 401ks and 403bs and retirement plans and real estate, and they have a lot of their money in something like the S&P through a retirement vehicle. And you have to look under the hood, like Don just mentioned, and see that 7 of the 500 stocks are driving alpha right now, and they have for months and months and months in a row. And so that narrow leadership, as we call it, is extremely dangerous. Don't take my word for it. Go back and look at 08 into that 09 correction. This is exactly what happened. Money managers were overweight certain names like Washington Mutual, Apple, et cetera, and it just blew up, right? Because everyone's selling at the same time. There's a lot of managers that own Apple, Amazon, Nvidia, just Tesla, all of the names that you'd expect them to own right now, because they're forced to own them as managers that are active trying to beat their index, which is the S&P. So I think that the risk is extremely large, and the average person isn't aware of this. They just don't really follow their 401k. If you're just an average worker out there, you're not really looking at your 401k probably more than once a month or once a quarter.
Yeah, absolutely, John.
So what else about, well, I wanted to mention something because I know you've got great thoughts on this, Don. We're doing our conference together in Florida, October 20th through the 22nd. And one of the reasons I built it before the BRICS was because I wanted to have smart people like you, have a dialogue about the BRICS at the conference, because I think it would help to shed some light on what's coming, just later that week, which is literally next week now. Russia is hosting this meeting. I don't know if you saw in Kiko yesterday, but there was some real interesting articles about the what ifs of what could happen either from this meeting or in 2025 with the BRICS. So could you give us, maybe 2 minutes on that?
So I think the BRICS is, I'm probably going to be wrong here. I hope I'm wrong, but I think it's going to be a bit of a nothing burger here for gold, as far as gold, like jumping here, like going up $50 out of the BRICS meeting. And the reason why I think it's going to be a nothing burger is the BRICS currency. The reason why we haven't had one is it's problematic for importers, because all you're doing is changing from the dollar to something else. And whatever this else is, it's the same problem for importers. Importers still have to use that other currency and not their own. So they get stuck with this, whatever this new currency is. Now, it's great for exporters. That's why China and Russia are like, yeah, do it. Let's do it. Because the way that it will work if they create a new currency is you actually have to pay for your imports using the currency. So if you're Russia or China, you're going to be collecting this currency. You're not going to be spending it. So it's going to be a win for them. But if you're an importer, you got to buy it. So it hurts your currency. It's the same problem with the dollar. So they're like, okay, we're leaving the dollar and then we're using this thing. And so, no. And so their initial reaction is, I don't want it. And so so the news, they had a meeting this week, a preliminary meeting with just their financial ministers. And the main thing that came out of that meeting was they want to use their own currencies for cross-border transactions. Well, of course you do. And so, and so I don't know. We'll see what happens here. But I think it's going to be somewhat of a nothing burger for gold. If anything, I think the best case scenario is going to be, we're going to do it, but it's not going to happen immediately. I think that's what's going to come out of this meeting. Yes, we're going to create a cross-border currency, but it's not going to happen immediately, which is going to be code for, we got some people here that don't want it. They've had plenty of time to create this thing. It should have been ready by now, but
I agree. What about the fact that, like, last year we saw 35 to 40 countries kind of raise their hand and say, outside of the ones that got in, we'd also like to be considered for inclusion, and now that list is up to 90 to 100 countries.
Yeah, that's a different issue that I didn't mention. I was just talking about the impact on gold.
Yeah, understood.
Now, the impact on the dollar, that's a whole different animal. The
Okay.
dollar is definitely imperiled here because you got half of the world that want to move away from the dollar, and they're all kind of in agreement. And the reason why they want to move away from the dollar is because we keep exporting inflation. As we print money, we have a $2 trillion deficit. As we print $2 trillion a year or more, that devalues the dollar, and they're holding dollars as their reserves. So it's like they keep losing money. It's devaluing,
Yep.
devaluing, and they're tired of it. And they're like, and they're moving away from it. And so the Ukraine was the trigger for that. And so the dollar's imperiled, the dollar's in trouble. Now, Brent Johnson, he basically says that the euro dollar system protects the dollar. And he could be right, but I'm not in that camp. I actually think that the euro dollar is actually also threatened because one of the reasons why the euro dollar is so powerful and so massively used is because they basically make loans in dollars. So you have foreign banks making loans and you pay them back in dollars. That's how they create it. And because the dollar is more stable than their currency. Well, I think that what's going to happen, and I think they're going to refinance a lot of those loans into their currencies, the BRICS countries. We don't want these euro dollar loans. We're going to move away from them. And I think the euro dollar system will start to break down in tandem with the BRICS countries, basically not wanting dollars, if you will. So I'm very bearish on the dollar. Now it's at 103, it shouldn't be at 103 because the Fed said we're going to lower rates. We're going to lower rates. It actually went up. They lowered rates 50 basis points and the dollar went up. Now that's bad. That's not good. That's not what it's supposed to do. 10 years supposed to go down, not up. So that's bad. And so I think the reason why it's going up is because people are nervous about this election. I think they're seeing what I'm seeing, that there's going to be a bit of a crisis here after this election. The dollar is signifying that people are going to want to buy bonds as a safe haven for the uncertainty that's about to unwind here in the U.S. with this election. This election is very volatile, I believe, and I think that's the reason why the dollar's up. So my target in the dollar was 103 to 105. I didn't even get to 103 this fast. 103 to 105 when the correction happens, as the people run to bonds, to safe haven, run to dollars, and then after we go into that correction, then then they have to lower rates, puts downward pressure on the dollar. And then we go into recession, and then people start pulling money out of the stock market. Remember, 40% of our stock market is foreign money. It's trillions of dollars. Statistic. Trillions. So the foreign money comes out, that's going to weaken the dollar. And that's when I think the dollar, and once it gets like below 98, say, I think it's over. I think the dollar is toast, if you will. And then we're just heading to a slow ride down to, below 88. Once you get below 88, you basically have no support down to about 80. And so, 80 is actually that's a fairly solid, for me, a very solid target for the next 18 months. And once you get to 80, I don't think it holds there. I think it just keeps going lower. But yeah, I think
if the dollar goes from 103 to 88 or 103 to 80, though, don't you think like gold eventually gets even more of a bid? I mean, because gold and the dollar historically, going back to the 70s, have been, opposing forces, if you will. And right now they're running up together, which is not, completely weird. I mean, it's happened a number of times, but this time is really interesting because it seems like there's two types of investors. One that's, buying things like the dollar and gold and silver to try to protect, and one that's chasing everything on the tech, S&P and Bitcoin side, right? Like they're just chasing momentum and doing whatever they can to get that last 10% and eke it out like out of a sponge, which is totally ridiculous to me. But, what do you think about that? I mean, do you think that that you'd have a knee-jerk reaction down in a sell-off in many parts of our sector, gold, silver, and mining stocks, followed by then another leg up? Because that's kind of how I would see it happening.
Yeah, that's what I've been I do a midweek and I do a Friday recap. And for the last few weeks, that's exactly what I've been saying. And I've been tweeting
Okay.
it out as well. And my expectation, because a lot of people have been very bullish here, especially for silver breaking out, because the cycle high was like 32.50. This week, we got to 32.95. It's kind of had a new cycle high. But I've been saying that silver and the miners are holding back here. I mean, look at gold. I mean, it's had all-time highs, like 15 of them this year, and silver's 50% from its all-time high. And the miners are 50% from their all-time high. So they're holding back. Why are they holding back? They're holding back because people are nervous about a rug pull coming for the stock market. The stock market is kind of an animal unto itself, but the miners, they're a little bit more savvy. It's a small group of people, if you will, just the miners. And so people don't trust this. They don't trust this move in the miners. And the reason, because they think the cycle, basically, my opinion is the cycle low is not in yet for this year. Now, when I say cycle low, I mean that if you look where we're at right now, so we say we're at like 32.44 today in silver. If you think that is the cycle low for the rest of the year, I don't think so. I think we're going a lot lower than 31.44 before the year's over. And so if that means anything, it means like if you got some money on the sideline and you're like, well, I'm going to wait why should I buy now if it's going lower, right? You buy when you think it's going higher. And so I think the odds are it's going lower. So how much lower? Now, I think that gold, the reason why it's high here isn't because gold is a hedge. And it's definitely not high because of the dollar. The dollar's at 103 and gold didn't even hiccup. Gold's at 26.50. It didn't even hiccup.
Right.
The dollar went up from 101 to 103. The gold didn't even hiccup. So it shows you the dollar doesn't even care about the gold doesn't even care about the dollar. I don't think it's a hedge either. I don't think people are buying gold as a hedge for basically stock market going down. I think people are buying gold here out of concern, which could be as a hedge, but I don't think people are buying for a hedge. I think they're buying it because they're nervous about the U.S. economy and the U.S. bond market. Because we've never had debt at these levels, $35 trillion, adding debt at over $100 billion a month, close to $200 billion because we're at $2 trillion deficit. It's close to $100 billion every month, which is, that would be 2.4 trillion. So we're not quite at a round number, but it's over 150 a month. So people are nervous that and then remember, the U.S. economy is 25% of the global GDP. And if the U.S. economy and the U.S. dollar, and everybody's holding these bonds, here's the key to it all, which nobody is really talking about, is that U.S. bonds, especially short 3-month and 6-month, are what are used for collateral. Those are considered safe. Those are the foundation of not just the U.S. economy, but the global economy, because that is what's used for collateral. Well, I'm telling you that the whole U.S. bond market is starting to break. And that's the reason why the gold is up, because if it does break, gold is the one guy you want to hold. So,
sure.
But people aren't buying it so much as a hedge against the stock market going down. They're buying it because the whole system breaking down. But it's hard. I mean, it seems like it's a hedge, but I don't think that's really what's going on here. It's definitely not an inflation hedge. They're not buying because inflation is down. They're not buying gold because of inflation. And so I think it all has to do with the bond market. And so for that reason, I don't think the problems in the bond market are going away. They're not going away. Those problems in the bond market. In other words, the U.S. economy right now is dependent on spending from Washington. They're dependent on this big deficit. So they can't cut. So they're going to have to keep borrowing like crazy, 100 billion, 150 billion, 200 billion dollars a month. And so they're this massive borrowing. Who's coming up with the money? It's not going to be China. It's not going to be Japan. Who's going to come up with all this money? And if it's the Fed, that's problematic, because if it's the Fed, they're injecting money into the system, which creates inflation. which also moves the BRICS away from the dollar. That's problematic. And so that's the reason why dollar's higher. So I think that gold is not going to crash here. I don't think gold is going to go below 2350. I think 2350 is about as low as it's going to get. And so if that's as low as it's going to get, and 2400 might even hold here, then it's going to, but by year end, it's going to rip higher. And so we don't really have to worry a lot about a big sell-off in gold, silver, and the miners. Yeah, there's going to be a little one. There's definitely going to be a little one. And so so what I'm saying is that hold a little bit of powder back so you can buy a few stocks at a bit of a dip, but you're not going to be buying the bottoms here. Bottom was back in January, February. That's gone. We're not going back there, but you will be able to get a 10, 15% discount on some stocks and maybe 20 on others.
Okay. Let's use that opportunity to pivot into some names, because you and I follow the explorers and developers very closely. And as you pointed out on our previous show, the producing companies of gold and silver have done quite well, depending on which company it is. The Agnicos, the Alamosas, Eldorados. We've had some real success stories this year, but we've had a lot of, for lack of a better word, disappointments really in exploration and development stories. So I'm going to name a couple in gold, and then I'll let you talk, Don, about some of your ideas on gold, and then we'll pivot over to silver if that's good with you.
Okay.
So let's start with gold. I think I want to name a couple of names because we have a broad base, you and I want to name a couple of names that could be a better listing, if you will, for some people that are looking for companies on the NYSE or the NASDAQ, because I have a lot of financial advisors in my network, and a lot of times they can't buy something unless it's on one of those exchanges or trading at $2 or $3 minimum. So Dakota Gold is the first one I'll mention. You and I have interviewed Jonathan Ott once before. That ticker is DC. I met with them at Beaver Creek last month. I was very impressed. Bob Quartermain is their chairman. Between Bob and Jonathan, they own 16% of the float. You and I have a mantra that we put out there every month, pretty much, telling CEOs all the time, if you don't have 30% of the float locked up, we're not that interested, because we don't want to take under. And I think guys like Jonathan and Bob completely get that, because when you look at the rest of their top 10 owners, it's companies like BlackRock, Fidelity, Vanguard, like big names, which is, Franklin Templeton, very impressive list of companies that clearly aren't going to sell or panic sell here at $2.18. So I think that one is worth a look for investors, because they will have news in Q1, where right now they're at 2.4 million ounces of gold in the ground, but they were telling us last month that they feel very confident they can get to 3 million ounces, maybe as early as Q1, which would be 3 million.
By when?
Yeah. By January, February.
Wow.
Yep. That was Quartermain, I think, telling me that. So, they have a sharp geo team. They're right on a past producing mine, and they're on private land, which is what, from a permitting perspective really matters. So that's one to look at. The second one was Collective Mining. Both you and I were kind of, I don't want to use the word blown away by it, but they really put a good presentation on at Beaver Creek, and we both saw them independent of each other. That ticker is CNL on the New York Stock Exchange. They recently upgraded to the New York. Ari Sussman strikes me as someone who understands what he needs to do. One of the things you and I talked about in our last interview was having a plan. Ari strikes me as someone who has a plan in place, and they have a lot of potential ounces in the ground. One negative is they don't have a resource out yet, so we don't know, what exactly that number of ounces looks like, what the ASIC looks like, and all that. But in Colombia, where they are located, it seems like a pretty prolific area. You've got Aris Mining there, you've got Denarius there, you've got Soma Gold there. There's a lot of players, and Ari's talking like huge numbers in terms of gold in the ground, gold ounces in the ground. So they're trading at $3.18 right now, $3.20 roughly. We've been buying it right here at $3.20, $3.30 in full disclosure. So we're picking up shares because we think that as people get to know the story better in 2025 and they start putting out more news, there'll be more interest with a higher gold price. And lastly, I mentioned Inflection Resources as a play in Australia because you've been nice enough to introduce me to Australia a little bit more as we've gotten to know each other the last few years, Don. And this is one in New South Wales that really flies under the radar that's completely funded by Anglo in terms of their drill program. So they put out news, gosh, about 7 to 10 days ago, and the stock immediately responded on huge volume. So it went from 11 US to 21 US in 2 or 3 sessions, and then has settled back down now to about 16 and a half to 17 US. But that ticker is AUCUF. Alistair's got a plan there to not dilute shareholders, which I love. He's getting all the drilling paid for by a major, and they put out some really good results. So there's a couple of names that I've been tracking.
All right, I'm going to share my screen. I'm going to real quickly and show.
Sure.
The earnings for Q3. So the Mag 7 is the dark blue, and the light blue is the S&P, and this is Q3. And
okay.
You can see there's no light blue.
Right.
And there's been the whole year. We had a little bit in Q1, a little bit, but if you look at last year, I mean, basically, other than the Mag 7, there's been no earnings since 22. I mean, well, a little bit.
Right.
After third quarter of Q2, it's been kind of bad. Now, these out here are future. This is expectations, but this is pie in the sky stuff. Maybe it happens. Yeah. We go into recession, it could go down. These could all go down. But the bottom line is, if you start here and you go back, it's been pathetic. It's basically been all Mag 7. So I wanted to show that.
That's helpful.
Okay, so we're doing gold first. I was surprised by Dakota at 3 million ounces. That's impressive because I wasn't, big fan of them because I just didn't see the discovery hole. Collective is on my list. So I have 5 stocks. We're doing gold here, but on my favorites list, I have 65 names, and my exploration stocks are all optionality plays. So I have Freegold Ventures, Banyan, Collective, and Tudor, those 4. And the reason why is I want to, right now, because we've been in this bear market for 10 years, so sentiment has dropped. As sentiment has dropped, the valuation of the gold in the ground has really dropped. So you're able to buy, because we haven't turned yet. This market hasn't turned into a bull market yet for miners. So we're able to buy gold in the ground anywhere from $5 for me. 5 to 10 is kind of an ideal area, and then 10 to 20, and then maybe go up to 30 if I think it's going to get higher. So I'll go down some of these names. So Freegold Ventures, they're trading at 387 million, which you think is that's huge. 300. I'm not going to buy a stock with 387, but they have 22 million ounces, so it's still less than $20. It's still less than $20 an ounce in the ground. But 20, I loved it at 10, but I still think if you're paying 220, I still think 3-bagger all day long with that. Then Banyan's trading at 53 million. This is fully diluted, and they have 7-8 million ounces. So you're paying less than $10 an ounce for Banyan. I think Banyan's really on sale. Then Tudor Gold, they're trading at 194 million fully diluted, and they have 20 million ounces. That's $10 an ounce. So all of these are really cheap in the ground optionality plays, except for Freegold, which has kind of jumped. Then I have a couple other names that I like that are a little more expensive.
Before you move on, you mentioned Collective there. Can I just ask a quick question since we saw them independent of each other? So Ari was talking about 15 million ounces of gold. Is that the number he was throwing out to you guys?
Yeah, that's the number I have here. They're 254 million market cap, and they think they have 15 million ounces. So I'm valuing that at 15. So it's about less than $20 an ounce. It's very similar to Freegold, but I think that Collective has better grade, and probably like Freegold, they're both around. I think they're both going to get about $100 an ounce. They're very similar stories. Collective is probably maybe has more potential to grow in size. Comparing those two stocks, the difference for me is the insiders at Free Gold. So Free Gold has two groups that hold over 50%, and they're not selling. And these two groups are outside of management. These are both private shareholders, and they control the vote, and they're not voting yes in any acquisition. So if anybody calls them on the phone and says, "Yeah, we'd like to do a deal," they're going to say, "Fine," but these two groups aren't going to vote yes unless you pay them such and such. So I love that.
Yeah, and one of those groups is Eric Sprott, right?
Yeah, he owns like 29%. And it's like Eric's like, he's not voting yes for $80 an ounce. And it's currently at 20, so that's 3x. So that's why I say maybe he'll go for 90, maybe 100, but he wants more than 100. And this other group is right with Eric. They're basically saying they're with him. They're like, we're not giving this thing away. These are long-time shareholders. These guys have been holding before 2010. They go way back, and they're not giving this thing away. So I like it for that. Okay, so I mentioned Ben. Okay, so two more names. Now, these two names are a little bit more risk, but one of them is Lavros. So Lavros, I have Lavros at 3 million ounces. They're trading 104 million. So it's about $33 in the ground, which isn't cheap. But I think they could get to 6. This is a big deposit with a lot of drill. It's early innings. So if they get to 6, then you're really paying $15 maybe or a little more. But this thing has got some really good grades. So that if they drill this thing for a couple more years and they're patient, I mean, if they could sell it for $150 an ounce in the ground, then it's interesting. And the other one, it's more risk, of course. The other one that I think is interesting is OMI. OMI has 4 million and they're trading at 56, so about 20. So some of these stocks are trading, 20 to 30, which isn't super cheap, like Banyan's at 8. So, do you want to spend $20 an ounce in the ground? Maybe you only get a 2-bagger. You don't get the 3-bagger. So some of these, you could have bought some of these a lot cheaper. Lavros and OMI, they if you look at their charts, they've been taken off. So you're late to the game. Yep. You could have bought them a lot cheaper, but I'm mentioning them here. I'd find them to be, interesting drill stories still. They're not, as long as they're under $30. If they sell for 100, easy 2-bagger, they're not going to get cheaper, I don't think.
Great stuff on the gold side of things. Let's pivot over to silver. For me, I'll mention some of our success stories and ones that we're watching here. So silver, I've been on, 20 different podcasts last year and this year, 20 different shows. And I've talked about Aftermath probably on a third of those shows when the stock, when the silver question comes up to me, because I really believed that Michael would get it done. And the stock really got smoked last year into this year. We were able to buy it at 12 to 14 cents at one point. Just putting like order after order out there and getting filled. It's unbelievable. But today it traded up to 35. I think it closed right around there. This is kind of twofold. One is that silver is above 32 and it might break that 32.5 to 33 level you referenced, but also because Eric Sprott dropped another $5 million into the stock on September 16th. So, Eric now owns 19.2% of the float. Silver Corp SVM owns about another 4% of the float. When you start doing the homework, they qualify for what you and I look for, of that 30% of the float taken up by management, the board, big shareholders like Eric. And, they've got 2 projects, one in Chile, one in Peru, with a lot of silver ounces in the ground. I also like that they're able to diversify into manganese now, which was not a thing for 2022 or 2023, because that news came out in February of 24, where they're 99.9% battery grade manganese was found. And that could really diversify them as a company into 25 and 26. As we go forward, I've liked Silver X because I met Jose at Beaver Creek last month. The stock was trending at 14 to 15 cents for weeks. And I was saying to my followers, Don, that this is going to hold, because if you look at a chart, it's held that 14 level like every single time in the last 2 years. So it spiked down on like one day below it, but in a junior, you don't really worry about one day of trading. It's now at 18, so it's on its way. I think it's based already. I think you can expect some good things from them as silver's price goes up because they are a higher cost producer, right? But I think they've turned the corner there in terms of what Jose was telling me. And he's got boots on the ground. He lives in Peru, so he's got a much better feel for what's happening in Peru than some of these guys that live in the U.S. or Canada and operate a Peruvian mine. And lastly, I'll just mention a new one, Alta Copper, which is one that I just spoke with for the second time, October 4th. There was a webinar that went live today. If anyone wants to check it out on copper with myself and that CEO, it was done by Global One Media. And I think it was called like Stocks to Watch or something like that. But just Google search, Global One Copper webinar and Alta Copper, and I will pop up. And what Julio was saying, and again, sorry to deviate into copper here, but this one was just really interesting to me. He was saying that once we get our permits, like we'll get a new flock of buyers, right? So they did announce positive news around that last week, and the stock barely moved. I mean, copper is really. I know you don't follow it as closely, Don, but like it's really a conundrum right now because I think Goldman and Morgan Stanley are both calling for over 13,000 a metric ton in 2025, and that would imply a 35% move, I think, from today's copper price. Yet copper stocks like this are just stuck in the mud; they're not doing anything, and yet 32% of the float is tied up by Fortescue here. So I think Fortescue obviously it wants the whole thing, and smart investors and leaders like Julio are not going to give it up cheaply. So now that they've given like the market a heads up on their permitting, now it's just time to prove out the resource, and it's a large one. So I think we're looking for stocks like that, Don, in silver or in copper that really are going to make it, right? Like this isn't a risk of like either aftermath or them making it. It's like how much is the upside potential, and one of the things you can do as an investor to protect against the take under is do the work that Don and I do and make sure that you're not going to get your stock sold cheaply.
All right, I have lots of names. So I thought we were only doing exploration stocks. So Aftermath is a developer, in my opinion.
Yeah, I wanted to do exploration and developers. Yeah.
Yeah, and SilverX is a producer, but they also are a small producer.
Yeah, small producer.
But they're also developer. Adding a second. But since you mentioned that, I'm opening it up a little bit. I'm going to start with exploration, but I'm going to mention some other names. So
okay,
I'll start with exploration. So the exploration stocks that I like, the first one is Southern Silver. It's at $82 million market cap, FD diluted, with 350 million ounces of silver equivalent. So it's less than 50 cents, or a little bit more than 50 cents, right around 50 cents. So that one I just think has the risk reward is just really, really strong. The next one I think has a really strong risk reward is Kootenay Silver. They also have 350 million and they're valued at 78. So those two companies are basically the same. They're kind of identical, but SSV, Southern Silver, is one project, whereas Kootenay is like four projects.
Yeah, I like Kootenay better just because of the diversification, and they really had some good drill results a few weeks ago. Did you catch that?
Yeah, I like Columba. The Columba project's growing. So I would say that Kootenay has better exploration potential than Southern Silver. And so it's going to grow. It's at 350 and it's going to grow. So but those two are really nice optionality silver plays. And the third one is Unico, which is kind of under the radar, if you will, down in Argentina. And they have 100 million ounces and they're trading at 58 million. And so I think Unico. And then the last one that exploration play is Moranen. Moranen's another one. I don't have their silver.
How do you spell that?
Moranen, Maronan, Maronan, Moranen.
Got it. I haven't heard of them.
they're Australia. Yeah, they have a lot of silver. So those are the exploration plays I like for silver. Now, as far as the producers, developers for silver, so the Mormons, there's 8 Mormons. I think that you want to own all of them going into this, from silver running from 30 to 50. I think you want to own all 8 of the Mormons. I think the Mormons are all going to fly. The reason why they're called the Mormons is I call them the pretty girls. And so you're not supposed to marry a stock, but you can marry all 8 of these because they're pretty enough. So the first 2 are Hecla and Coeur. I think those are rated 1 and 2. And then you have Aya, and then you got First Majestic, and then Coeur, and then Hochschild, and then Fresnillo. So 1, 2, 3, 4, 5, 6, 7. I'm missing
maybe
one.
Endeavor.
Oh yeah, and the last one would be Endeavor. So those are the 8. I mean, I created the list back in November, and I call them the Mormons because there's the 8 stocks you can marry. And you want to own. I think you want to own all of them. And then developers, yeah, I like Aftermath a lot. Aftermath, I mean, with the manganese, it's basically a negative cash cost silver mine, which is insane.
That's what people are missing.
But they're
and
not
you're right on the verge
it.
of a breakout here.
They're not going to call it a silver mine. They're going to call it a manganese mine, which I don't think, because they don't. That's the way this business works. Whatever has the most revenue is what you're going to, because manganese is going to be 50% of the revenue. So they're going to say that. But over time, as silver goes up, silver is going to pass up manganese. So eventually it's going to be a silver mine, but initially they're probably going to call it a manganese mine. But it's literally a negative cash cost silver mine, which is insane. Then Discovery Silver, I think, is my favorite development play because it's 1 billion ounces of silver. They just have so much silver that, and the capex isn't that high, so they're going to be generating a boatload of free cash. I think the payback on this thing is very, very short, and then they're going to start generating a bunch of cash. But I just love Discovery. They've already submitted their permits. I think this thing will be permitted by 12 months. By this time next year, I think it'll be permitted. Then Go Gold and Vizsla are like very similar stories. They basically have fantastic silver properties, just fantastic. So you got Go Gold has their Los Ricos projects, and then Vizsla's Panuco. Those 2 projects are just unbelievable quality, and they both have low capex. Like Vizsla's capex is like 225 million, which is really low. Go Gold's a little higher. They're like more. The first one's like a little over 100 million, and the second one's a little over 200, about 300. But they're both going to produce 15 million plus ounces of silver. Those 2 companies, I think, are still cheap. I think, and the final one will be Abra. But Abra makes me nervous because I think Abra is going to sell their project before they build it. Their management team has never, I don't think, had their heart in it in building it. They always had their heart in drilling it. But they have the insiders to build, like all the projects I just mentioned. They all have solid insiders. They're not going to get taken out. But Abra has solid insiders, but I still think they're going to sell. But if they build that mine, Abra has big upside. Everything I've mentioned here in the silver space, the upside is significant. Silver gets $5. We're talking some really, really big moves here.
Yeah. In the interest of time, I didn't go too deep into some of my silver names. I only gave you Aftermath and SilverX, but Abra Silver is one that we really like. I'm actually going to see John at the conference next week. He lives in Florida, and he, has been at the helm there as they've grown those ounces in the ground to 258 million now over the last few years that he's been CEO. So like you said, they're drilling. They're going to continue to drill the Jack Zone. There's potential for more ounces there, which is great. It is a little bit of a question mark in terms of like what they do, in terms of monetizing things. However, I will say that earlier this year, they gave up 8% of the company to Kinross, 4% there and 4% to the biggest utility in Argentina. So, they have diversified the shareholder base a bit more, which is good. And I love that they're cashed up. I mean, you don't have that dilution risk that you have on so many of these juniors, right? Where you just wake up one morning and you're down 12 to 15%.
Yeah, I would really like to see. So we have basically three big projects that need to be built that are single projects. So we got Vizsla, Go Gold, and Abra. I would really like to see two of those guys get together, a merger of equals. We've been seeing these mergers of equals, and they're very, very potent. They create unbelievable synergies. Like Next Gold, they just did a merger. It is so potent because of the synergies, and especially if you can do it to improve your company, if it's an improvement. And I think these would, if you can have like a Gold and Abra, I think those two and any of those three, because I think they all have enough insiders that after they do the merger of equals, they're like, we're going it alone. And you're talking about 25 million ounces of silver. If any of those three merge together, you're talking 25 million plus ounces a year. 25 million. Hecla today produces 19. They're going to be First Majestic produces 22. They're going to grow because they just got a hold of Gatos. But you're talking about 25 million plus if those companies do a merger of equals. Just a massive company that they become overnight if they do it. So I'm hoping two of those three go together. And I think Abra is really probably the one I would think would be a good fit for one of those other two. Just a hunch. But those three companies are not all going to stay separate. They're not. I wouldn't be surprised if all three of them do a merger over the next 2 years. Just because the quality of the project, when the quality is that high, you want to leverage it somehow. You either want to buy it or you want to merge with somebody else, protect yourself. We'll see what happens. But those three companies, I do not think any of them will be standing alone in 2 to 3 years.
Before we move on from silver, we just mentioned on our last get together the Core and Silvercrest merger. So I don't want to spend like a lot of time on that, but I think what you're talking about is right there, right? I mean, Core was a successful standalone mid-tier. Silvercrest, built their project in Mexico on time and under budget, and they just merged to form, what they believe to be a very powerful entity, and that really improves the balance sheet there at Core.
It's a fantastic merger because it helps both companies. Silvercrest did not have a pipeline. I didn't realize until the Beaver Creek conference. I didn't realize that Silvercrest, that mine really has a lot of exploration potential. I talked to this one guy and he was explaining to me about the exploration potential at Silvercrest. And he basically said, the size of the property, the drill targets, this mine's not going to get much bigger, Don. It's like, they had a problem. They had a growth problem. It's really a 10-year mine life. That's not fabulous, but it's 10-year mine life works great for Coeur because now Coeur basically has this beautiful mine for 10 years. It's going to generate a boatload of free cash for them, and it's going to lower their overall cash costs because they had a problem. So they both had problems. So Coeur had a high cost problem, and Silvercrest had a pipeline problem. And so merging them together fixes both of their problems. And Coeur becomes a much better company. But now Silvercrest shareholders, they get the same upside because Coeur is basically still very cheap. They get the same upside, but they don't have any problems. It's like we get upside with no problems. But some Silvercrest investors, the ones that are very conservative, they're like, but I want that free cash flow. They had low cost and they were real happy with their free cash flow. But it was a trap. Yeah, you're happy because the next 3 years, everything's rosy. But once you get to year 4, you got a problem. So is your investment for 3 years? Come on, you got to think of long term. This thing does not have a long mine life. You have a problem that needed to be resolved. And now, if you look at Gatos and First Majestic, it's the exact same story. Although Gatos does have a longer mine life because it's a big property with a lot of drill targets. So it was actually a better deal for First Majestic than Gatos shareholders, but First Majestic was really highly undervalued. So no Gatos shareholders, they got a pretty big chunk of First Majestic. They got like 35% of the thing. So because Gatos was actually a pretty high valued company. So they're getting 35% of First Majestic. So yeah, they gave up some, but I think it was a net win because Gatos shareholders, they gave up the risk of how much silver they're going to find on their property. Plus, I think First Majestic is a better explorer than Gatos. I think First Majestic is a new set of eyes. They're going to go out there and drill Gatos, and they're probably going to find a lot more silver than Gatos would have found. But I think that one was a great deal for both sides. Now, I own all 4 of those stocks, and I'm totally ecstatic now. First Majestic was actually a problem stock. I call it the run of the litter of the Mormons. It almost didn't belong. But now they're actually go all the way to ranked number 3 now, because if this deal closes, now First Majestic, they have their cost problem solved. Basically, their ASIC's going to be 18 or 19. At $30 silver, they're generating a boatload. Now their free cash flow, their silver production is going to jump to 31. They're going to be First Majestic suddenly a big free cash flow machine. They're going to be on the market looking in another year. They're going to be out there looking. Plus, now they have a free pass for JC. They got all this cash, incoming cash flow that they can put on JC and get JC drill get JC out and take their time on that. Now they don't have to rush JC and get it going. That's going to take their they're going to take their production up to like 37 to 40 million ounces a year. Mm-hmm. And so First Majestic is suddenly a good stock again. They went from problems.
And that stock has tremendous torque, right?
So
tremendous torque.
All 3 of those companies now in the Mormon list, all 3 of them are very pretty girls. Mm-hmm. You got to like all 3 of them. And the other one that I put in there is Aya. I think Aya is also strong company with some really strong cash flow growth. Boumediene just looks beautiful, and so those are really the top 4. I actually had Silvercrest ranked last. I rated them recently before this deal was done. I had Silvercrest rated last on the Mormon list. She was starting to lose her looks because they just didn't have the exploration. Gatos wasn't even on the list. So, but Gatos was close, but it just didn't have them long live. So that's that.
Yeah. And one other way I'll just mention from my background on ETFs that investors could play this is there is an ETF out there called SILJ, which encompasses a lot of the names Don's been talking about here with the Mormons and the mid-tier silver plays. That would include Hecla, Core, First Majestic, and a lot of other names. So that's one of the things that we do when things get really bombed out. We buy the ETFs because I can follow these chart patterns pretty well. That way I get a basket of all these stocks, in one easy way to trade. And now SILJ is trading at, 1320 as we record this, around there, 1330. It looks like it's holding in there and could break out to 15 to 16 now. So I think that the silver stocks, I don't know if you noticed this, Don, but over the last, I'd say 5 or 6 trading sessions, even though silver may be down, the silver stocks are not going down anymore, which is really new behavior.
Right. This is good. So I'm going to share my screen. And I want to show people, I'm really disappointed in SIL and SILJ, the 2 ETFs. And I'm going to show you. Okay, so this is SILJ, which is supposed to be a silver junior miner. So what happened is that these silver stocks, they all got obliterated over the last 10 years. And what these ETFs have done is they've come in and they've added gold miners. It's really disappointing. So here we have 6 of the top 11 stocks. This is SILJ. These are the largest percentages. So we got Pan American at 8.7. Well, guess what? Pan American is no longer a silver miner. I mean, yeah, they have a bunch of silver projects, but if you look at the revenue, it's a gold miner. Now, they have they have a lot of silver resources, and they have 2 large silver mines that they want to build. Well, they have one in Escobal in Guatemala, but they're probably not going to restart it for a couple of years. Then they have another one in Argentina. They have these two massive mines, but that one's 2 years off. So they're basically a gold miner. And then they have Harmony Gold Mining at 7%. I mean, it's a joke. They have it They have it here for liquidity. So 15% right off the top is gold miners. And then you have
a couple of things there. Look through that list. Like Core is number 3, Hecko's number 4. Like I was saying, you can go down that list and it will include exposure to a lot of the names we were just talking about. That's what I was getting across. But also, SILJ got sold earlier this year, if you remember, to a new company. So they are not being operated by the same organization that operated it previously. And that could be the situation as well, because when you have an ownership change like that, they have their own metrics now for these companies to meet. I agree with you. Like when you're dipping into gold and a silver product, it's not doing people justice because they're buying it for silver exposure. But I'm just trying to explain what happened.
Right. So then they got Artemis Gold at 4.5%. Artemis Gold. What the heck is this going? You know, so you got Harmony and then Artemis Gold. And Artemis Gold is actually a development play. Now I like Artemis Gold, but it's not even an elite gold miner. I mean, what in the heck is this stock even doing in this portfolio? They're building a mine right now, and things can go south. It's not an elite. It's not even an elite mid-tier stock. It's decent. I own it. I'm doing well in it. But the only reason why, you know, it just doesn't fit on this, you know, in this ETF. Then you have a royalty play, which I'm okay with it, but you know, I really don't want to be this heavy. And I hope it's the only one, but they probably have some more. But Wheaton, you know, and now we have Seabridge Gold, which is, in my opinion, it's an ugly stock. It does not deserve to be 4%, and it's a gold miner exploration stock. It's like they don't even have any good drill results. It's like, what in the heck is this? You can see. So Artemis doesn't deserve to be on here. Seabridge Gold. I mean, how can you even make an argument for owning these things? And then we got Skeena Resources, which is another developer, which I don't, you know, it's when I could see having some quality gold producers on here. You know, Dundee, some of the stocks in Australia that I like a lot, Eris, Skeena, some of these other ones. It's like, my point is, okay, so they're putting gold miners on here, and the gold miners that they're putting on here aren't even good names. So I'm and SIL is just as bad. And I think the reason why these companies have done this is they don't trust silver. They don't trust them. And so they're basically saying, we got to put some gold miners on here to have less risk. But when they do that, they're taking away our upside. They're taking away our leverage.
Yeah, I think that's a great point. And it's a valid observation. It's frustrating to see ETFs do this. I mean, if you remember back in 2016 and 17, GDXJ, same thing. They were creeping up, right? During 2016's rally, they were taking in a lot of new cash flow into the ETF. And it got to a point where they had to like redo the prospectus language in terms of what they were trying to achieve, because the cap, if you looked at under the hood of that product back then, they were buying a lot of large cap stocks because they needed the liquidity. They couldn't buy the small stuff anymore. So it became more of a mid cap to a large cap product, which is one of the reasons I sold some back then in 16. I sold half my position because I was like, you know, this thing's not really what I wanted anymore. I wanted small cap exposure, right? I don't want mid and large cap. I can buy that through GDX.
Yeah.
So
you should buy if you want SIL or SIJ, you should just buy the Mormons. The Mormons, you know, basically get the top 8 silver producers. And, you know, I just think that is a much better way to go than buy these ETFs. The ETFs have really disappointed me. I own both of them. I own SIL. I own SILJ. Matter of fact, I have pretty large positions in both, but I don't expect them to do that well. Perform that well. We'll see how much. They'll probably do better than GDXJ, but not much. Let's put it that way.
Well, why don't we leave it there? We had a really good chat on this today, and our next event in November will feature a CEO. We'll be back on schedule, interviewing a CEO at least once a month, which will be great. Really looking forward to seeing you next week, Don, at our conference down in Florida. Have you speak there, and both of us will be on stage together during that presentation, where you're going to give us some insights as to how you operate your book, and that's going to be exciting, I think, to have you there. So we'll wrap it up here, and the next time we talk, gosh, we're going to be after the election, so it's going to be really interesting to see how this plays out.
Yeah, but me and you, aren't we doing a podcast tomorrow?
Oh yeah, that's going to be with a different channel, but I meant like on our monthly. We scheduled our monthly actually the day after the election, so we can update our followers on this channel to say, hey, this is what happened.
We're doing a podcast together tomorrow on another channel, so I think it's
yeah, we're doing that on the BRIC channel with Jesse Day. Yeah,
that might come out this week.
Mm-hmm. Yeah,
if you guys are interested.
Yep. Well, thanks, Don, and thanks to all of you for listening. We'll be back in a few weeks, and this is John Feneck with the Feneck Commodities Report for InvestorTV. Thank you.
Thanks, John.